We'll now go to the ranking member of the Capital Markets Subcommittee, Mr. Sherman of California, for 5 minutes.
I'll agree with the gentleman from Arkansas that these additional disclosures that so many investors want are difficult to design. It took over 200 years for the accounting profession to define and provide systems to tabulate, audit, and report the information on the balance sheet, the income statement. And I think sometimes in our fervor to give people information that they want about the environment, we overlook how difficult it will be for that information to be comparable, tabulatable, and audible. What shocks me is that 20 years ago, it was more folks on the conservative side that wanted shareholders to be able to make decisions based on something other than earnings per share and shut up and do whatever the corporate board wants. In this room 20 years ago, we passed legislation to allow shareholders and pension plans to divest from companies that were helping Iran's economy at a time when it was building nuclear weapons. And today, many conservatives would divest their stock holdings in a company that was about to transfer technical artificial intelligence technology to China. We're told by some that materiality is 5% of earnings. But I think Mr. Cunningham was correct in telling us that materiality is what a reasonable investor thinks is important. And some people think the environment is important. Some people think whether the Chinese Communist Party gets the most technical AI information is important. Mr. Cunningham tells us that we should let the states decide. That is a race to the bottom so that it's kind of democracy, phony democracy, kind of a Putin's democracy. One vote, one person, one vote, one time. You elect a board, then they're in total control. They go to Delaware and they'll agree to pay some fees as long as you give them rules that make it clear that the shareholders can't tell the board what to do. And then if Delaware won't do that, you go to Wyoming. If Wyoming won't do that, you go to North Dakota. If we're going to have shareholder democracy, it needs to be protected by the SEC. Mr. Ellison, welcome back.
Good to be back.
And, you know, you deal with conservatorships, guardianships in the state of Minnesota. If somebody is incompetent to deal with their money, a conservator's appointed. Now, look, if somebody wanted to spend their money buying bad art or Yankee season tickets, maybe a conservator should be appointed because they're wasting their money on something totally unreasonable. Would an investor be deprived of their a right to decide how to invest simply because they cared about, say, the environment?
I certainly don't think so. I think it gives them freedom to invest.
And would you take away their right to invest if they didn't want to invest in a company that was transferring highly sensitive technology to China?
I don't think we take away their right to invest.
But how would you have a right to invest on this basis or that basis if you didn't get the information that you wanted? Now, and I don't want to point out, there might be some peculiar investor who cares how many buildings are painted purple, and we don't have time to tell them. But the reason for this hearing is not because investors won't vote for these resolutions. It's because they will, and 5% of the time they do, and 25% of them vote for them. This is the reason for this hearing is to blind investors to the information they want. So is there any meaningful way for an intelligent investor to decide to invest on the basis of impact on the environment if we don't allow the investor to have that information, Mr. Ellison?
I don't know how you can make an intelligent decision about an investment if you don't have the information.
In fact, perhaps the only thing that would be crazy is in trying to invest for the environment in a society that deprives you of all information about how your investments are affecting the environment. let's see. And finally, is Vanguard, my time has expired.